Took out the high there, 1. Took out the high there, 2. Took out the high there, 3. It's not made up, guys. It's on your right-hand side of your charts. And you could say, well, you know what? I'm going to go all in here because I've got an end of trend. I know that this is a big accumulation short from yesterday, just like the big accumulation long from yesterday or the day before yesterday. And all of a sudden, guess what you've just done and what you've managed to achieve in those 2 buy trades there? What have you managed to achieve that nobody else on the planet achieved? Not even Goldman Sachs can achieve this. You bottom ticked gold and you top ticked gold. 2 full accumulation distribution trades. Impossible to accomplish any other way. Impossible that this is even a thing, but there is a thing, guys. You've just seen it. You've just seen it as exact worked example for the last 2 days. The accumulation, the distribution, the narratives, the stories. You see it? Now you might say, yeah, pure chance that over the last 3 days it's worked. Let's go back over the last 4 days, guys. If you go on the right-hand side of this chart, is that a distribution sell on the way down or not? There's definitely a distribution coming in here, yes? So can we mark off these distributions? Absolutely. I mean, that is a fast money break. Whether it's 3 or not, it doesn't actually make any difference for what I'm showing here, right? If that is a distribution, and we know it's a distribution because it's broke so many internal market structures, agreed? Can we also agree that there must be an accumulation area somewhere at the top edge here, yes or no? How are we going to find an accumulation? Well, it doesn't matter if we start from 1, 2, or 3, because that's not what's important, right? It's the balance area that's important. So as soon as I see a distribution coming out here, whether you count this as 1, 2, or 3, it doesn't make any difference, does it? Because you're going backwards anyway. And this is what you're trying to find here, correct? So when I look at this area here, I say, well, I can see that we had a tiny puff of volume here. But realistically, can we all agree that that's the accumulation short based on the market maker model? If that's the market maker short on Wednesday, based on the market maker model, and I then look at this, what happens here? What happened at this location here? It's the same bloody trade. So they've came from an accumulation short into a distribution. So this was a big commercial short, agreed? So when we come into this area, there's a chance that there's going to be another big commercial short coming from here, correct? A chance that there's going to be another big commercial short. And we see a distribution taking place here. We already talked about the possibility that that was a distribution. And that led to us going backwards to find this balance. And that led to an area that we thought, well, wait a minute, we've just had a reaccumulation short from an area that we had seen an accumulation short from. So when we know that that candle exists there, we can then work into a sell candle here. And that sell candle there at 41.60s results in a trade of $10,000 per contract on the way down. So it's not just the current sell that we've got in massively sell side. We've also been able to recognize that these accumulation areas on the bigger time frames allow us to see the massive opportunities that these big accumulations bring. So why is this trading from the dark side? Because like the world of the dark side trading, it's hidden under the table, isn't it? It's not somebody screaming out loud. It's not somebody waving their arms about. It's not anybody drawing themselves any sort of attention. It doesn't have any particular patterns. Because if we now take off that profile, for example, just to give you an example, and if we take off this profile pattern here, just as an example, if you look at these two accumulations, what would Mills and Boone say about these two accumulations? They're completely different shapes, aren't they? If we look at this first accumulation here, for example, and I draw it on the screens for you so we can compare like with like, this accumulation kind of looks a little bit like this, agreed? That accumulation looks like that, doesn't it? So in other words, they take it higher to get short. They're working it higher to get short. They're working it higher to get short. But what does a second accumulation look like? Still a short accumulation. Well, it looks almost exactly the opposite, doesn't it? They seem to be accumulating in this type of pattern here. You agree? And then, yes, of course, in this little phase, they go higher again into a phase here. But, so in other words, there is no actual, and this is against the understanding of any of these guys that write these books, there's no pattern to an accumulation, because the pattern to an accumulation depends upon the arrival rate of orders at that stage, the amount of buying or the amount of selling that's coming in to those areas. It depends upon the time of day. So what do you notice about the time of day on these two short accumulations? Bearing in mind the white area is the US session. Which session needs the price to go higher? The low volume session. So does that make sense that the low volume session requires the price to go higher to get volume? And then when we come into the high volume session, does it make sense that you can pretty much get volume anywhere? So in other words, the time of the day seems to also have an impact on the type of pattern of accumulation we see, doesn't it? Interesting. Interesting. So when we're coming into, for example, a quiet period on gold, just now, would it seem reasonable if I was going to accumulate gold at 5 o'clock in the evening, London, that I'd probably need to go higher? Whereas if I wanted to accumulate gold at 3 o'clock London, I'd probably be able to absorb gold at 3 o'clock, yes or no? Would that seem reasonable based on the observation you've just made from this chart here on a bigger time frame basis? Well, let's take a look at gold in the reality of the current price charts. Let's take a look. You've all said it's reasonable. Two of you said it was reasonable. So let's take a look at that reasonable decision. So here's two possible accumulations of gold. Yes, possible accumulations. So the blue line is, of course, delta on the chart, right? Blue line is delta. So let's assume that there was an accumulation of this area here, right? What time was this? I've cut the time off, have I? No, I haven't. This is the high volume time in gold, isn't it? Yeah, high volume period of gold. So we don't really need to take the price down during the high volume period of gold. We can absorb all that selling in this area here, yeah? And then we can mark up the price into these areas and we can close off our positions, yeah? So obviously the area goes very quiet now, doesn't it? Because look at the time now, guys. The London session's closed, right? US, New York is in lunchtime. So would you imagine that during this period, the price would, if we're going to get short, the price would probably go higher, yes or no? And then you could notice that the price then goes higher, it goes higher, and then it goes higher. So all of a sudden, you notice that this is an accumulation, an aggressive higher accumulation into heavy selling. And in this quiet period, you can see that it's a quiet accumulation into higher prices, just to make sure that you get what you need in this area here. They're both accumulation positions. This is an accumulation long and this is an accumulation short. But again, they're both different patterns. High volume, very low spread trading. Low volume, very high spread trading to get business done, right? Well, that also makes sense, doesn't it? Because if I add 10,000 contracts on the bid here and I add 10,000 contracts on the offer, what size is the spread? It's very tight, right? For very, very, very big size. But if you go from 10,000 on the bid and 10,000 the offer to 5 on the bid and 5 on the offer, well, that's kind of skinny, isn't it? So if I said to you there's 10,000 on the bid, 10,000 on the offer, what would happen to price? It would just go here, and then it would 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 go here, right? That's what would happen to price. If I said there's 5 on the bid and 5 on the offer, what would happen to price? It would go here, and then it would go here, and then it would go here, right? Well, that's kind of what happens, isn't it? This price goes sideways, and this price goes wider. And then the sell-off then starts, and then the sell-off starts, and that's how it's worked. So again, the time of the day gives us another clue about what we would expect from this trade, doesn't it? It gives us another insight into how to start thinking about the market in terms of what you're seeing, about what you would expect to see. So you would be looking at this area and say, oh, I'm definitely going to sell it here, for example. And you'd be like, why would you think that's the case? You're coming into the US, the London close. Do you not think that they're going to try and get some liquidity at this price here or this price here? Of course they are. So when you're looking at that, you're saying, I'm not going to take that trade. But at 2 o'clock or 3 o'clock, that's selling coming in and you want to buy it. You're all in, aren't you? You're buying all the stuff there. You're buying everything you can in that area. You're taking the market bid at that stage. The time of the day is important. So this very, very quiet period short here versus a very, very heavy period short here. And you can see the two patterns. You see this one goes higher to get liquidity. And this one doesn't need to go higher to get liquidity. And you get the sell-off coming in from both of them. Yeah. Make sense? I want to take another quick break, guys, and then we'll get into the final bit of classroom, and it's just another way of looking at the arrival rate. So let's take another couple of minutes, guys. Grab a coffee, refresh the Jack and Ginger if you need, and then we'll get into the classroom on another way to look at arrival rates.